I think one of the obvious expectation is that short-term liquidity tightening measures were taken largely to combat volatility in the currency markets. And as it now looks like that risk has been time being postponed, so the short-term liquidity definitely should be corrected substantially. But I think beyond that, if we look at the inflation numbers, though overall are looking at 6.5%, the bifurcation shows that manufacturing inflation is just close to 1.5 times. So which is almost kind of no inflation on the backdrop that the diesel prices were raised, on the backdrop that rupee had depreciated and we had slightly increased imported costs. So the next bolder move, if at all, would be that selectively how do we give either subvention or be pro-growth rather than continue to just worry about inflation. So in case the RBI action goes beyond reducing short-term tightness in the markets and also reducing the extra cost on MSF borrowing and so on and so forth, to actually injecting some extra liquidity and reducing rates, I think that would be really good. This could be probably the time. At the most, he will wait for a month or so more for things to stabilize, but I think direction would be that.
Amisha, hi, afternoon. What's the possibility that over the next 2 to 3 months, this market will hit a new all-time high? And would you say that this is no longer a bear market rally, maybe start of a new structural bull market?
No, it will be very tough to say whether it is start of a structural bull market, particularly because some of the quite a few other legs of a structural bull markets are all absent. And even if we start the interest rate reduction cycle, which is not on a very strong wicket at the moment, but even if we start, the way our economy is poised at the moment, it will take a couple of quarters before we see some improvement on the ground. And in the meantime, any volatility globally can once again come and hurt us. So I would still probably maintain that the markets will continue to be volatile. The way we did an extreme in terms of a combination of rupee-dollar rate at closer to 69.70 and index at 5,100, not impossible that over the next 3 to 4 months we do an all-time high, which I believe would be about 6,300. So kind of a 6,400, 500, not impossible. But calling that still as a structural bull market would be little too early, because I think the volatility will continue.
Okay,
so little putting aside this volatility, which we think will probably continue to be there over next 6 months also, we do think that one of the fundamentally things where things are happening or action is happening is that US market, European markets are slightly improving. Even if rupee has come back from 68 to 62 and may go down to 60 or whatever, it is still better and as a good push to the software companies. So we think that in terms of business outlook, the software continues to be a reasonably okay, good place. To some extent, in a rising market, it will remain sober or it will underperform. But on a medium to long-term basis, I think they'll continue to outperform. Other place over next quarter or so, if the interest rate cycle reversal as what we are expecting do really materialize, then auto will be a place one can probably look at. And in terms of financial, despite the fact that PSU Bank is really very cheap at the moment, we think that they will continue to remain a trading opportunity, and structurally one will still have to go with private banks. But at this juncture, we are not going overweight on the banking and financials. In terms of very stock specific, I think amongst our top pick is Tech Mahindra Wipro on the software side, and we have within the auto pack Hero Honda, And within financials, we have two, both ICICI and ING Vysya, as some of our topics. Larsen continues to be our capital goods, engineering, infra topic, and I think that Larsen should do very well going forward.
Okay, Amisha, thanks for giving us all